Are you looking for a way to scale your short-term rental business and buy more properties? Well, co-hosting might be the right fit for you. Welcome to the Co-Host Coach podcast with Joe Roney. This episode of the Co-Host Coach is brought to you by Savvy STR Agents. If you're looking to buy a short-term rental, then contact the STR Savvy Agent team at savvy.realty.
Hey guys, welcome to another episode of the Co-Host Coach. I am Joe Roney, and I am here to jam with you and do a couple solo episodes. And today we are going to talk about that fun thing that everyone loves to discuss, taxes. And I am, full disclaimer, not a CPA. And I'm not going to sit here and say that I am a CPA. But what I do want to talk about is what you need to be doing for not only the owners that you co-host for, but also for your personal business. Again, disclaimer, please talk to your CPA. Ryan Bakey is mine. He is fantastic, and I cannot highly recommend him enough. But definitely have your own CPA give you advice on what to do here. But here are a few things that you definitely want to discuss. So if you're doing this in a true co-hosting business to where you are not collecting the funds, the funds are actually going to the owner, technically, the owner should be sending you a 1099 if your business is an LLC. If they're paying you through Zelle, through Venmo, they don't need to send you a 1099. But if they are paying you through QuickBooks, which is the way I invoice mine, technically the owner should be sending a 1099 from their business to you. A lot of people get that a little bit off because they're thinking, oh, well, I'm the property manager, so I should be sending them. But you're not the one collecting the funds. They are. So, and they are actually paying you. So you are their contractor. So you won't be sending, things like 1099s to your owners. Now, on the flip side, you as a business owner will be sending 1099s, or you should have. We are in February now, so you should have already done this. But you should have sent 1099s to your cleaning team, or to your handyman, or the HVAC company that you use, anything along those lines. So those are some things that you should be doing in your business. If you did pay those businesses, again, through Venmo or through Zelle and Venmo are actually going to send 1099s to that contractor. So what I've been told from my CPA is that I don't have to send a 1099 if I'm paying through those platforms. The other thing is if you're using a credit card, it is that you technically do not have to send a 1099 if you are paying via credit card. But a lot of these contractors are getting paid in other ways. They're sending you a QuickBooks invoice. You might be, I actually have one lawn and landscape company last year that I mailed a check to. Had to go online, fill out the information, had my bank mail him a check, and that's the way that he was paid for the entire year. So again, definitely had to send 1099s to him, had to collect the W-9s from him and from anyone else that I had to send a 1099 to. The other thing that's really great this year about 1099s is that you no longer have to mail them. You actually can get an email, and you can email the 1099, and that is sufficient enough, which is fantastic because it saves a lot of paperwork, a lot of buying those special 1099 or W-2 envelopes, whatever it may be, and not having to go through that whole process. So really, really love technology sometimes. Sometimes it can be a pain, but sometimes it is actually a great thing. So being able to email those, if you have a bookkeeper, that bookkeeper's handling this for you, which we do. I actually have a bookkeeper that does handle our 1099s, W-2s, things like that. Even though we do keep track of our own books throughout the year, we do use a bookkeeper for that type of stuff. So they do handle that for us. I send them all the W-9s. They issue the 1099s. All is good. Now, the second part of the taxes that we want to talk about is you as a business owner. And what does that look like? And again, I'm going to disclaim, I am not a CPA, but I have owned multiple businesses over the last 17 years, starting with the preschool that my wife and I own. And, there's a couple of different ways that you can be in business. And, one is, it could be your single entity LLC. You could be in a partnership LLC. And typically the general rule is if you're only doing, $60,000 in revenue or less, or $60,000 in profit, or less, you're probably fine just to keep it under that LLC. And, the way that typically happens is it's in that LLC, all the income's going to pass through to your personal, but, business taxes are actually due a month before personal taxes. So everyone thinks, oh, April 15th is a tax deadline. Well, guess what? Business taxes are March 15th. They're a whole month earlier, or it's somewhere around that date. So your business tax return, unless you're filing an extension, is typically due a month earlier than your personal. So that's something to think about. If you have a CPA that's doing your business taxes, you should be getting them those documents right now. Don't wait until March 1st. These CPAs work their butts off, and their bookkeeping teams work their butts off to get their taxes done and to get your taxes done. And of course, in many situations as a business owner, you're going to have to file for an extension. But even if you have to file an extension, don't wait to send them the documents. Send it to them now. So obviously get your documents together, send that over to your CPA to get your taxes done. If you're growing your business and you're getting to do well over $60,000 in net revenue, so you're at $100,000, $150,000, maybe $200,000 a year in revenue or more, it could be beneficial for you to switch your co-hosting business to an S corporation. And what happens when you do that is you're actually going to issue yourself a paycheck, an actual W-2 paycheck where you take taxes out and pay those payroll taxes on a biweekly or monthly, whatever basis that you have set up. But what that's going to do is it's going to save you the self-employment taxes from being in a regular LLC, because in an S Corp, you're going to be taking taxes out of your paycheck, and it's going to substantially save the amount of self-employment taxes that you're going to have to pay. So if your revenue is increasing and you're getting to that level, you definitely would want to consider, and this is the time of year to consider doing it, because you would want to start changing over to that S Corp now so you can have paychecks throughout the year. There's no general rule to say exactly how much you need to pay yourself, but I believe what my CPA has told me is it has to be a reasonable salary. You can't pay yourself $10,000 a year and you're making $200,000, but we're going to be switching to an S corporation this year, and we'll probably do somewhere around a $50,000 salary, something like that, in the business, in the S corporation. So again, no exact figures. That's something that we'll figure out with our CPA and decide on, but it'll be a reasonable salary throughout the season, and that's going to help us save next year on our self-employment tax. Now, that's for your getting your taxes done for your business. That's for getting your stuff ready for your CPA. And you're going to want to get them everything, all of the statements you have. Hopefully you're doing your bookkeeping on something like QuickBooks or Stessa, and not just a bag of receipts, and going to hand that over to your CPA. It's going to be a really expensive tax bill if that's what you're doing. But if you can be pretty organized and do that, that's a great, keep all those receipts, keep all the, files together, keep everything in QuickBooks. It's the best way to do it. If you're looking for a bookkeeper, John Farber, I just, worked with him recently. He is in the short-term rental space. He's got a great bookkeeping company. Get a hold of him. It's a great service. There are also some great bookkeeping VAs out there, and you can look into them as well. Now, last thing I'm going to talk about is, what do your owners need? Okay, because your owners are going to need to file taxes, because they're collecting the money. It's their own business. And, you're going to have a statement on how much they paid you for the year. Hopefully they kept their receipts throughout the year, but they may ask you for a statement on how much they paid you. And that's really simple. If you're using QuickBooks, to go in and print out a report to show how much they paid you. But they also may not know exactly how much revenue that they have. So Airbnb and VRBO will actually issue a 1099 for each listing, and it's probably going to be sent to that owner. If that owner has an email and everything's sent to them, If you have that email in your name, but it's their listing, it may be sent to you and you need to provide it, but they're going to need that 1099 from Airbnb and VRBO. Obviously, if you have any direct bookings, they're going to need a report on information on that income. You obviously can print a report out with all of their income for the whole year if you're tracking it in a thing in something like QuickBooks, but you're definitely going to want to make sure that they have everything that they need to be able to file their taxes. You're not responsible for their taxes, but you are responsible for getting them the reports that you would be able to have for them so they can do it. So I know taxes are not a fun thing to talk about. Ryan Bakey has a podcast that is absolutely fantastic, and he deep dives into each one of these topics. And I always highly recommend listening to his podcast, talking to your CPA, and getting the information. But we are in tax season. This episode is going to air here in February, here in the next week or so. So, we are getting prepared for one of those seasons. The last thing I'm going to talk about is, what do you want to show for profit? And this is a for-profit business. If you're co-hosting, this is not like you're owning a rental where it's a business that you're getting passive income and you get massive write-offs and you're going to show a loss. You're going to show income and you're going to pay taxes on this business. It's going to happen. There's not a lot of write-offs, or there's not enough depreciation and write-offs in a co-hosting business for you to be able to show no income and not have to pay some taxes. Paying taxes is not a bad thing. It means you're profitable. So prepare for that. Whether you're doing paying quarterlies or doing it once a year, doesn't matter. Whatever you have set up, make sure you're prepared for that. You are going to be paying some taxes on this business. So as we get ready for this season, that's just going to happen. So the last thing that I really wanted to, kind of leave you with as you're preparing for, this season, I'm going to take a quick break. You hear me in there? I'm going to take a quick break and then finish this one. I have to regroup my thought, what I was going to talk about. So make sure you edit this part out. What was I going to say? I got sidetracked on something and I totally forgot the point that I was going to make. So the last thing that I really want to leave for you today is, as you're going into a new year, and this is something that is a goal for me. My wife and I had this discussion recently, is organization. So, whatever you did in 2024, if you're going to do your taxes, you're putting things together, if you don't have the system in place to be organized to make this process easy, today's the day to change it. Today's the day to change it, to make sure you get yourself more organized. So 1 year from now, when you're going to sit down and do your 1099s or do your taxes or whatever it may be, have a better system in place than you do today if you feel it's needed. So it is actually one of my actionable items that I'm working on for myself and my wife as we move into 2025. Because it's really easy to get really, really busy and have so much on your plate that you don't do those little things that you need to do. And it can make your life so much easier. And that's as much as, entering receipts on a weekly basis instead of a monthly basis. It's common that I'm going into QuickBooks at the end of the month to double check all the receipts that were entered in QuickBooks. And I'll have purchases and say, oh, what was that for? Or what was that property? And I have notes written down and I have a system, so it does work, but I want to get a little bit more organized as we're going into 2025. And one of those things is trying to sit down and do my books weekly with my wife so we can stay a little bit ahead of the game. It's also going to help us keep track of our P&Ls and all that good stuff. So have a system, put it in place. If your system didn't work in 2024, now is the time to revamp it. And that is tax talk for co-hosting in this space. So I appreciate you guys joining on this week's episode of the Co-Host Coach. Tune in next week. We are going to have some special guests coming up soon at the end of this month and in March, but I have a couple things that we're going to discuss over the next couple weeks, and I'm looking forward to seeing you then. Thanks.